Everyone. I'm so excited to be here moderating today. I'm Candace Thompson, your local realtor professional here, moderating our conversation that we're having with Mr. Edgar Hardin, the York County Tax Assessor. So, Mr. Hardin, we're so excited to have you as a guest here just to share your knowledge and educate us on everything that you do and how we can help be a benefit of sharing information, to our clients that we're working with and the public and the community. The purpose of today's discussion is to help bring clarity as to how property assessments work and what homeowners, future buyers, potential investor owners need to know about taxes. We know that we're in an assessment year, so we're super excited, about all the information that you're going to share. And our biggest goal here today is education. So we just want to be able to walk away with practical knowledge that can empower us to help our clients, but also empower, the public to make informed decisions. So with that, I want to say thank you, Mr. Hardin, for taking the time out of your schedule, because I know you're busy and I know your team's busy, to join us today to share your expertise. We'll get started with a couple of questions, but before we do that, I would love for you to share just about your role and what you do, on a day-to-day basis to as the York County Tax Assessor, and then we'll get started with our questions.
Yeah, thanks so much for having me. I think this will be hopefully very beneficial to your realtors and potential and future clients. My name's Edgar Hardin. I've been with the County Assessor's Office since late 2005. I was a staff appraiser from 2005 until 2015, and then I accepted a role of the deputy assessor, and I held that role until December of 2021, and the former assessor retired, and I took his position. So I've been in this position for about 4 years, and you're correct, 2025 is a reassessment year, and we'll be sending out notices in the next couple weeks. So it's going to be a busy year or so following.
Awesome. Awesome. Thank you so much for that. And yeah, you've been with the York County Tax Assessor for a very long time. So that's awesome. So if you could share with us what the overall property tax assessment process is in York County, since this is a tax assessment year, and how often do we go through assessments?
Yeah, so the overall tax assessment process, it's going to start with my department, the assessor's office. And so we identify, we classify, and we appraise all real property in the county. Identification is going to be who owns it, where is it located. Classification is going to be your 6% by default or 4% owner occupied if applied for and granted. And of course, we have a team of real estate appraisers who are going to do our fair market valuations. And every September, we certify an annual assessment roll, and we're going to provide that to the auditor's office. And the auditor's office is going to take the assessment roll and generate tax bills. And those are going to be put on the system by October the 1st every year. And then, of course, you have the treasurer's office that is going to collect the funds or payments from the tax bills. So that's kind of a big picture: assessor, auditor, treasurer.
Okay. Okay, awesome. So is that something new every September? There'll be an assessment from the auditor role. Is that a new process for you guys?
So it's not. So we do county reassessments, county-wide reassessments every 5 years, and with 2025 being a reassessment year, um, statutorily we have until the bills are actually issued on October the 1st to send out assessment notices. In a non-reassessment year, they must be sent out by June the 30th. So they give us a little bit more time to establish our valuations, and also too, it's beneficial to the taxpayer because there's a 90-day window that they can appeal their assessment. And by sending these out in September, and they receive a bill in early October, it gives the property owner an opportunity to see how the new assessment actually impacts the tax amount, which is typically what most property owners are concerned with, is the amount of taxes they pay. So there'll be a 2-month overlap when these notices are sent out, giving them plenty of time to take a look at the reassessment notice, and if they have any questions, give us a call. If they think the valuation is incorrect, they can appeal that as well. So yeah, every 5 years. This is really nothing new. It's just we have a little bit extra time to send these notices in a countywide reassessment year.
Okay. Okay, wonderful. So the plan is to get the tax assessments out in September. Bills typically come out in October, and then they'll have 90 days to, if they need to ask a question, dispute, if they have questions, concerns, they would have 90 days from that September timeframe or October timeframe.
Yeah, so it's 90 days from the date of the assessment notice. It actually, on the front of the notice, it will have a date of notice as well as the deadline appeal date as well. It's front and center.
Okay, perfect. Edgar, how is fair market value determined for residential and commercial properties?
So we're going to use a methodology called mass appraisal, and it's basically the valuation of multiple properties, the entire county, as of a given effective date, which is going to be December 31st of 2024. And we use a lot of statistics. It's a systematic application of appraisal methods, and we review those statistics. And we have a staff of 13 appraisers who are going to be analyzing market trends as of the effective date, 12/31/2024.
Okay. Edgar, was that your phone or was that you beeping? I just want to make sure that wasn't someone else in our chat room.
Calling me.
Uh,
My apologies. I'll turn the volume down.
Thank you. And I did see a message that it is a little bit hard to hear you. Is your volume all the way up on your computer?
It is.
Okay. That did sound a little louder. Okay. Okay, perfect. Okay, so you do mass appraisals, and that's how you determine the fair market value, for the commercial and for the residential properties. I also ask you, as you're looking at the mass appraisals for the whole county, are you guys doing a reassessment for commercial buildings this year as well, or is it just residential properties?
So it's commercial and residential. The only commercial properties that are not under my jurisdiction are those that are manufacturers, and those are actually appraised by the South Carolina Department of Revenue.
Revenue. Okay, perfect. Um, And then when someone purchases a new home, um, does that automatically trigger a new assessment on the value for the county, or how do you guys assess those properties?
So the purchase of a home is called an assessable transfer of interest, and it does trigger a reassessment of the property for the following tax year. So any properties that are purchased in this calendar year 2025 will be reassessed for 2026 with an effective date of 12/31/2025.
Okay. And when you guys are looking at that, are you going straight to whatever the amount that the buyer purchased the property for? Or do you still say, you know what, we think this buyer might have overpaid because maybe they went above what the true appraisal value was? Or do you make an adjustment there?
So we're certainly going to take a look at the purchase price, but really what we're obligated to do is reappraise the property at fair market value. So we're going to
Okay.
look at the market as a whole, not just that one individual sale.
Okay. All right. Wonderful. And then also, if you're an existing homeowner, so let's just say you've been in your property for quite some time, and there's a new subdivision coming literally right across the street that was just land, and you're out in the, the city limits or the county, but you are, your community has been here, it's established, your pricing isn't what the new homes across the street or down the street might be worth, but that does affect bringing the values up. um how do you guys look at that? Like, do you automatically say, okay, this community is bringing so much value to this area? Do you raise the land value across the street or down the street for the existing homeowners, and can you accelerate their value, or is there like a percentage that kind of keeps things in a moderation?
So there's several different scenarios I think in this question. So the existing property owners are going to be subject to a 15% cap in the increase of their taxable value. Their fair market value may be impacted far more than 15%. But existing owners from one countywide reassessment to another, their taxable value can only increase by a maximum of 15%. The new subdivision across the street, um, as those properties sell, those are going to be, as they're built and as they're sold, they're going to go on the tax roll for the first time at their full fair market value. They're not subject to any cap because they weren't existing properties. And certainly they can have an influence on the valuation of properties across the street or in a given area. But we do try to define certain areas or subdivisions as what we call a neighborhood. A neighborhood is going to consist of similar or like properties. So the
Okay.
property across the street we may consider that part of the new subdivision's neighborhood, or we may say, hey, these are a different quality or classification of homes, and we would value those in a separate manner.
Okay, wonderful. As you're doing your appraisals, what data sources or appraisal methods are used in your office, to come up with the values?
So we're gonna use listings and of course sales. All of the recorded deeds are filtered or funneled to my office. We also have the Marshall and Swift cost manual that we use for the cost approach. We have a subscription to CoStar, which we use for commercial properties. Various other publications and sources. We network with other real estate appraisers, of course. And as far as approaches, there's three approaches to determining fair market value. You got the cost approach, sales comparison, and the income approach. For residential, which is the majority of the properties in the county, we're going to be looking at sales comparison. We also are going to look at the cost approach as well. And then for commercial properties, if they are under appeal, we can use the income approach to value those, but we're going to need some information from the property owner.
Okay, thank you. What are some deadlines that property owners and fellow realtors should be aware of? Are there any particular deadlines we should be aware of?
Yes, probably the most important is going to be the legal residence application. That's the application that some refer to as owner occupied or special assessment as legal residence. By default, all properties under my jurisdiction are assessed at 6%. And I don't think many people understand that. I think they assume that the county would know that, hey, I bought this home as my primary residence. Why don't I receive this tax rate? By default, everything's at 6%. They have to apply to receive the special assessment at 4%. And the deadline to do that is the first penalty date that the annual taxes are due, which is typically January the 15th. I think the best advice that one could give would be to, as soon as the people purchase the new property and they occupy that property, they need to go ahead and apply for that special assessment if they meet the criteria. There's also another special assessment called for agricultural use property. That also has the same deadline, which would be January the 15th for the preceding year. New owners, again, I think the sooner they're made aware that they need to apply, I think the better their chances of following through, submitting the documentation and getting it to us. Kind of once it's out of sight, out of mind. If they don't apply and they escrow taxes, then in the spring when these mortgage companies are analyzing their escrow accounts and there's a shortage, the property owner is made aware, and there's a huge increase in their payment, monthly payment. And the reason for that is that they did not apply for that special assessment. Now, there is a refund process that we can go through, but that's going to take some time. And many times the property owner may have to pay that extra amount for a month or two before the county can get their application processed, refund those funds, and then they have to forward those funds to their lender. So that can take several months.
Okay. So for the agricultural properties, let's say someone purchased the property, it's agricultural use and designation when they purchase it. How is the rollback taxes a part of your jurisdiction, or is that something different? So if they turn that property, let's say an acre or half acre, to be for their primary residence, so they're going to actually build a structure and live there. So then, and then the rest stay in agricultural tax use. Is that part of under your jurisdiction, or does that go to a different department within the county?
Yes, that is under our jurisdiction. So if someone purchases a property that's currently or existing agricultural, it stays on for the year in which they purchase. And that also goes the same for owner occupied or legal residence properties, as long as the new owner doesn't rent them out after they purchase. So both of those exemptions or special assessments are going to be removed for the following tax year. And it would be up to the property owner to re-enroll the property in agricultural use or as their legal residence. And if they do change the use, in this particular case would be constructing a new home, then that would subject that portion of the property to a rollback tax. And that is something that when our appraisers are out doing the site inspection, and when we're entering in the data to our system for the new dwelling, we flag that to be billed for rollback. And of course, we forward that information to the auditor's office, and they issue the rollback bill.
Okay, awesome. Okay. How would a property owner appeal an assessed value if they don't agree? And is there any additional documentation that you guys typically would request them to provide for this appeal?
So in a non-countywide reassessment year, which would be next year 26 or last year 2024, they can appeal the classification or assessment or valuation anytime during the year. We actually have a property appeal form on the assessor website. Those have to be submitted before the first penalty date, like other applications, which is the 15th of January. In a countywide reassessment year, they're going to receive a notice, and again, they have 90 days to appeal. Use the same form from our website, and really any and all documentation that they think that may help us to see their opinion evaluation, they can submit that information. There's no limitation on what they can submit. If it's a new home or new purchase that's had a recent appraisal done for financing purposes, they're more than welcome to furnish a copy of that. If there's any physical issues with the property, pictures or just a description of things that we may not be aware of, that may impact the valuation. So really anything that they can provide us to help them would be great.
Okay, wonderful. And before we get out of the assessment uh, questions, do you guys actually go out to do on-site visits, or are you riding around the area to kind of see, what may be taking place in the area? Are you doing anything other than, I know you mentioned the different methods and the different resources that you have at your access, but are you actually going out in the field as well?
So we are. So all building permits from the county and all the municipalities are also provided to my department, and our appraisal staff is going to do site inspections for each of those permits. We're going to do a site inspection. We're going to take measurements. We're going to get a subject photo that we can enter into what we call our CAMA system. It's a computer assisted mass appraisal system. And so, yeah, we're gonna be out in the field inspecting new properties. We're gonna be riding around in existing neighborhoods to see if there are any changes, as well as taking subject photos of those, any additions or renovations or things that may impact market value. Those are the things that we're going to be looking for.
Okay, awesome. Something that some realtors may not know a lot about is the accessible transfer of interest exemption, ATI exemption. And I know that that's a very broad area, and it's so many different scenarios to, how it can and cannot apply in a particular scenario. Can you just share what that is, and how does it work in York County, and what's the process for someone to apply for this?
So the ATI exemption was introduced after Act 388 was introduced into law, which was 2007. And essentially, it was introduced to provide new property owners an opportunity to possibly save on taxes on a newly acquired property if it meets certain criteria. Uh, the main criteria is the property has to be a 6% investment property at the time of purchase. And then it also has to remain a 6% non-owner occupied investment property for future use as well. So an example would be a property that sells in this year, 2025. It's a 6% non-owner occupied property that has a taxable value of, let's just say 400,000. And let's say that they purchased that for 700,000. The property, and we determine that the 700,000 is an arm's length transaction indicative of current market conditions. So that property is going to be reassessed for 2026 with the new effective date and could potentially be somewhere close to that 700,000 mark. If it meets the 6% criteria and is going to stay 6%, then they can apply for this exemption to possibly aid them in the amount or the increase in the valuation from 25 to 26. And it's a savings up to 25% of that increase.
Okay. So let's say someone was able to get the ATI exemption. Um, and let's say we're going through the reassessment year, would that particular property be able to stay within the existing 15% that you mentioned earlier, for the increase? I guess that was a state mandate, or is it different because it is an investment property?
So so once that property is considered an assessable transfer of interest, that cap is going to go away for the following year, and it's going to be reassessed at full fair market value. So their taxable value and their fair market value will be the same for that reassessment. And so this ATI exemption can help on some of that increase because the cap has gone away. And as far as deadlines for that application, they have to apply before January 31st of the year in which the property is reassessed. So in that example, a property sells in 25, it's going to be reassessed for tax year 2026. They need to apply for the ATI exemption before January 31st of 2026.
Okay.
I think probably the best advice that I would give, or maybe that you guys would want to give, would be just apply, and we'll determine if it qualifies or not, because there are many criteria that are involved. But there is no harm in applying. If it doesn't qualify, we'll let the taxpayer know. If it does qualify, we'll let them know as well.
Okay. Okay, perfect. And does this ATI exemption qualify for second home properties? Because are they assessed at the 6% as well? The second home properties, vacation homes?
Yes, they are. So it's any property that's occur at 6% in the year of the sale, which can be a rental or an investment or a second home or a commercial property. So yes, it does apply to those if they are 6% in the year purchase, and they're going to remain at 6% during their ownership.
Okay. Okay, awesome. Well, that's good news. So for our investor owners, or if we're helping people with second homes, vacation homes, there is some type of a little bit of a break they can get if they qualify and if the property qualifies for all of the different criteria that it needs. So that's good for realtors to be able to share to the community, because a lot of people may not be familiar. And that form, that's on your website as well.
It is on the website. All of these applications and forms are on the assessor website at yorkcountygov.com.
Okay, awesome. Let's kind of switch over to primary properties a little bit versus the non-primary properties. So when we're looking at the difference between that 4% and 6% tax rate, are there some additional things that, let's say, the 4% is also getting some additional exemptions, or the 6% maybe getting some exemptions, or maybe they might be paying something extra that the 4% doesn't pay? And how that's determined.
So again, all properties by default are going to be at 6%. And if they apply and meet the criteria and qualify for the 4%, they're going to see a reduction in that assessment ratio from 6 to 4. 4% owner occupied properties do not pay school operating tax, which is the largest part of the tax bill. So if you're at 6% and you get the reduction to 4%, you're also going to not pay school operating tax. And so the difference between the 6 and the 4 and the reduction in school operating tax is significant, as you know.
Awesome. And is this statewide, because we have other counties that flank us that, we as realtors, we sell in the different counties. Does this kind of flow over to the other counties? Like, does the state follow the same guidelines when it comes to this 4%, 6%, and 4% not paying the school operating taxes, or is that just a York County decision?
It is statewide, and it is part of the Real Property Reform Act of 2006 that was ratified in 2007. So same rules all across the state. Now, if you go to North Carolina, they don't have, their tax structure is actually very different. But yeah, this is statewide.
Okay. And what must a homeowner who is owner occupant do to keep the 4% legal residence rate?
So they have to own and occupy the property as their one and only primary residence or domicile. They have to complete the legal residence application, which they are certifying that the information they're providing is true. We also are going to need copies of state issued IDs. Typically, that's going to be driver's license. Even if the property is in an individual name, if that person does have a spouse, then we're going
That are kind of like excelling in school and that have a good teacher select.
Edgar, you faded off at that very last statement about the spouse.
He was in a
to. Okay,
middle school and then in
I think
high
it's
school.
background noise. I'm not sure.
It's like,
Okay, so yeah, if the property is owned by an individual and they have a spouse, both the individual and the spouse are going to need to submit documentation proving that they own and occupy that structure. The reason for that is we want to make sure that the spouse, which under South Carolina law is considered a member of the household, doesn't own another property that they're receiving the exemption on. It's another criteria. You can only have it on one property. If one property, even if you're married. And if you don't have South Carolina IDs, we do accept permanent residence cards, green cards, valid visas. Statutorily, all vehicles registered in the owner occupant's names also have to be registered at the address of the property. The reason for that is vehicles pay school operating tax. So that's one way that the state and the county is going to recoup monies for the schools. So you have to own it, you have to occupy it, you have to reside there, you have to have some supporting documentation, and you have to certify on an application that everything that you signed off on is true.
Okay, great. Thank you for that. We definitely appreciate that explanation because that does make a big difference, for the homeowners. So if they're married, everybody in both spouses would need to fill that out. Even if a spouse, let's say they're married, but they're separated, one lives somewhere else, the other one lives here, the other spouse would still need to do this form as well. Correct.
So they do account for situations such as a legal separation, and that is part of the statute that's actually been amended. And what we're looking for, if you are legally separated, then we're going to need a copy of the action page that's filed with the family court showing that you actually are separated. And indeed, if a couple is separated and they can provide that documentation, we're only going to need the person who's occupying the property to complete the form. So if you are legally separated and you've gone through the proper channels, one individual can receive legal residence on their home, and the other individual can receive legal residence on their home.
Okay, great. Thank you. Um, how does additions, renovations, any improvements affect the assessment of the property?
So again, all of the building permits that are issued are going to be filtered and funneled to my department, and our appraisal staff is going to go out and do site inspections on those permits. And anything that they see that we think would have an impact or an increase on the market value, those changes are going to be added for the following year. So if an addition or renovation is completed in tax year 2025, we will reappraise the property with those additions for tax year 2026. Now, there is a difference between properties that sell versus properties that just have additions or renovations. The existing structure would still be subject to the 15% cap, but the addition would not be subject to a cap for the following tax year.
Okay. All right, that's good to know. As we're thinking about our seniors and our veterans and disabled individuals and disabled veterans, are there any exemptions for those people?
There are. So the homestead exemption is going to be the most popular for the elderly or disabled, and that's actually through the auditor's office. So we process the 4% legal residence application. The auditor's office has an additional exemption called the homestead exemption that can be applied for as well. It's going to be for owner occupants that are 65 or older, or who are disabled that have an award letter of their disability through the state. As far as disabled veterans, there are property tax exemptions, but those are applied for through the South Carolina Department of Revenue. If those are granted, each county is notified on a monthly basis, and we'll code those based upon the determination by the Department of Revenue. And as far as just exemptions for veterans in general, I'm not aware of any exemptions, only for disabled veterans.
Okay. All right, awesome. So we have our senior citizens with homestead tax exemptions through the auditor's office. And then for disabled veterans is through the South Carolina Department of Revenue is where they would need to contact them to start that process. And then you guys will get notified on a monthly basis in regards to those individuals. And for people who just have disability, like they're not a veteran, there's something that they would be able to apply for too.
They
Is
may
that right?
also, yeah, they may also qualify for the homestead exemption through the auditor's office as well. There's certain criteria as far as the percentage or type of disability, but I would certainly advise anyone that that may possibly qualify to certainly reach out to the auditor's office to see if that's something that they can qualify for. And currently, the homestead exemption deducts $50,000 from the taxable value of the property before taxes are levied.
Awesome. Has the state thought about increasing that amount as values have been going up, has as conversations about increasing other things have been just thrown out there, nothing's set in stone. But has the state thought about increasing that amount?
They have. I've heard figures of increasing it to 75,000. I've also heard going ahead and doubling it just to 100,000. But that $50,000 has not changed since I've been employed here since 2005.
Okay.
But the real estate market has certainly increased.
Yes, yes. Because we just look at the prices for everything. I know there's been conversations in increasing capital gains. It's not anything set in stone, but I just think about, as people are aging, their incomes decreasing and values keep increasing, especially in our area because, it's such a robust area. That could help our seniors, and our, South Carolinians, more, in
Certainly.
that regard. Um, let's ask about this. Does your office coordinate with the zoning and the permitting office? And for I know you said that you will get the permits and you'll look at everything, but do those departments like the planning, zoning, permitting departments have any say and influence over how you guys assess the properties?
So indirectly, they do. The permitting process, of course, is going to go on before the information is provided to us. So planning and zoning is going to check the current zoning of the property to make sure that the use is permissible to what the permit applicant is wanting to do with the property. So all that has been factored in before the permit's actually issued. And if it is, in compliance, then they'll issue the permit, and that comes to us. So zoning has a bigger impact, I feel, on commercial properties than residential. I mean, typically, if we're going to get a residential permit, it's in an area that is already, zoned as residential. But commercial properties, the permitted uses certainly are going to play a factor into the fair market value and what those properties are going to sell for.
Awesome. Well, we've gotten through a lot of really great questions. We have about 20 minutes left of the allotted time that we wanted to take up of your time, and we definitely appreciate you taking this time to answer questions that we um, had for you. But I did want to allow fellow realtors that are on this Zoom with us to have the opportunity to see if they have a specific question that you could answer for us. I am gonna ask the fellow realtors if you could raise your hand, I'll call on you. I know we have some lenders in here too, but if there's a question that I didn't ask or you want more clarity on something, we would love for you to take this as the opportunity to do that. And if you just use the emoji for raising your hand, I'll call on you and give you the opportunity to ask Edgar, the question that you have.
Candace, can I say while we're waiting for anybody that has questions, in the chat box, I have linked all the websites that Mr. Hardin has responded to, the tax collection office, the assessor's office, the auditor, and the homestead exemption page. So you can find all those links in the chat box.
Thank you. I'm just making sure I'm not missing any hands here. So I think I don't see any hands, Edgar. So, and I don't see anybody sending me a message. We did ask a lot of really great questions. I mean, we talked from, growth and market trends, property changes, use and development, just general assessment processing, important dates to know, the appeals process, ATI exemption, and then primary versus non-primary. So we wanted to be very thorough in covering a lot of different areas within, the property tax assessment process, and then just your role in as the tax assessor for York County. Is there anything you want to add, to our commentary today? Oh, I do see a question. Oh, before you add that, let me also just ask you this question because it just popped up in the chat. Is the homestead exemption available immediately or do they have to live in the home for a while?
For
Thank you,
my
Darla.
my understanding, they have to be a South Carolina resident for a year, and I think it's based upon when they purchase the property. I don't want to go into the full criteria since my department doesn't approve those. But certainly the auditor's office, I'm sure they get that question quite often. Um, I think the best thing for any of these exemptions or applications, it never hurts to apply. Most
Okay.
of any of all of these applications we discussed are one-page applications that really don't take a lot of time to complete. So I think that is just great advice for any new property owner. Apply and see if you get the exemption. If you don't apply, you're not going to receive it.
Absolutely. We have another question that came in the chat, Edgar. The special assessment fee for new bills, is that changing or are new ones being considered?
Are we talking about impact fees?
Yes.
So, School District 4, Fort Mill School Districts, I know had a recent increase in their impact fee. Um, but certain I think Clover's School District 2 has one as well. I'm not aware of any proposed changes at this time. I think there has been some discussion about an increase in that impact fee for School District 2 or Clover School District. But again, all of those impact fees are going to be handled during the permitting process. So all of that is taken care of before my office is even made aware of the permit that's been issued.
Okay. Okay, awesome. So when they have the impact fees, that goes directly to that municipality for whatever the reason for that impact fee. That doesn't come back to the county.
Correct. And from my understanding, most of these impact fees are used to fund school operations, which, as we know, that owner occupied residents do not pay. which are typically owner-occupied residents are going to have the kids that are enrolled in the schools. So that's, from my understanding, that's the reason for the increase in these impact fees over time is the monies to operate the schools, of course, are going to increase. The amount of schools that need to be built is also increasing, so it goes to fund those needs.
Okay. I have a question that just came to mind, and this might not be in your area, so I'm not 100% sure. So let's say an area is enticing a business to come to the town, and they want to offer these different incentives, and different things in that regards. Um, and then they say, well, we're going to waive some taxes and things for you to bring this business to town. Is that under your jurisdiction or is that a state jurisdiction?
So any of those properties that are under a fee agreement, which you're referring to, or fee in lieu of tax agreement, is going to be handled through the economic development as well as the state. So any of those properties that are in one of those agreements are not under the assessor's jurisdiction.
Okay.
State would provide that information to the auditor for the annual bill.
All right. Sounds good. Does anybody else have any additional questions that they want to add in the chat or raise their hand to ask? Okay. So I'm not seeing any additional questions. Billy, is there anything that you can think of that I might have left off that we can ask the assessor?
No, ma'am. I think you've covered everything. I would just ask Mr. Hardin if there's anything that you think the realtors might know that we didn't cover. I think we covered it all. We talked about it this before, but anything we left off?
I've got one if I can jump in.
Yes, John, go ahead.
No, John.
I recently had a property with solar panels. The people had put on over $50,000 worth of solar panels. Speaking to appraisers, and I'll just give you a rough one appraiser said that possibly they would give 5,000 credit, and two appraisers said they would give them nothing. How does the county handle that, Edgar?
We're typically not going to make any adjustment for solar panels. It's very hard to determine the impact that something like that may or may not have on market value. So at this point, we're not adding any additional or detracting any value for solar panels on residences.
Thank you.
Yes, sir.
Awesome. That was good. I haven't ran into many, haven't sold any properties with solar panels, but I am seeing them more. So that's good. Thank you, John, for that question. Well, Edgar, we definitely appreciate you taking the time to come to Piedmont Regional Association of Realtors and have this conversation with our realtor community. We are going to share this with all of our realtors that are in our association so that they can be a better help to the people in the community and helping their owner-occupant non-owner occupant clients that they're helping, buyers and sellers. It was a wealth of knowledge and a lot of really great information. I learned some things that I didn't know and got some clarity on some things. So, that was one of the things that we wanted to make sure that we accomplished here. So we definitely appreciate you taking the time out this Monday morning to meet with us.
Yeah, thanks so much for having me. And if any other questions come up from the group or anyone else, you have my contact information. Please reach out. I'd love to get ahead of these things instead of people finding out too late. So I think what y'all are doing is great. Thanks for having me, and reach out anytime.
Absolutely. Thank you so much.
Thank y'all.
Bye.